Good evening. Ira Epstein with your SPDR ETF stock market wrap-up. And this is Monday, and it is the 5th of May, Cinco de Mayo. Happy Cinco de Mayo to everybody. Should have said them in the other videos. I wish you wanted all a happy Cinco de Mayo. Interesting day. Ford came out today late and said no more forward guidance. They said they're taking $1.5 billion hit. That's what they're figuring this year at this point now. They really can't make business decisions in the way they want because there's so much uncertainty. I cover it in great detail tonight in my written futures report. Palantir came out, it looked like to me a blowout number, and they're down $8 a share. So if you think you have this figured out, I don't think you do. These markets are rough right now. The cross currents are immense. You, as a businessman, have a hard time. What do you do? How do you pass on tariffs? And you don't know what the tariffs will be. Where do you order goods? You know, you're not going to order from China at 145% tariff if they're not exempt goods. What do you do? It's a rough time. And the stock market paid no attention to that for 9 days in a row as it just kept rallying. Today, a little bit of reality came back into the market where the market set back, but I used the word little bitty reality. I didn't say that this is all over. As you can see, Ford down 11 cents, but I'm telling you what they came out with later in the day, so we'll see what happens there. I was surprised that copper was even up today. I didn't understand why it was. The gold came alive. The gold futures were up nearly $90, and that carried up here pretty good at $8.90 higher in GLD. If you take a look at Tesla, down about $7 at this point. And the president did something else again that I don't understand. We woke up this morning and we're hearing the foreign movies are going to get 100% tariff, and if you produce them elsewhere, those are going to be tariffed. That's not how the movie industry works. This certainly hurt Netflix, which was down $22. Apple didn't fare well. What about your Apple TV? If they have anything foreign, that could be a real problem for them. Amazon Prime, that didn't help them. I don't think that he thought this out and understands the game. I think he'd be better off on some of these tariffs with giving tax credits. Instead of the punishment one way there, give it the other way. Don't you think that we'd shoot more in America if tax credits were given? I happen to think that's one way to look at it that is different. NVDA today, didn't really go anywhere. One of the better performers was Uber, and Boeing was, again, a good performer today. Now, I've had requests, as you know, for new stock charts that you should follow, and we're going to do that. But first, let's get to what we have tomorrow. And let me get first here. For those of you that want to take a look at SPY, I did a special report on SPY. It's right up here. You go to our website at iraepstein.com. It's my name. It's spelled right there. No space in between. iraepstein.com. Give it a click. I think you'll find it very interesting. I cover what's going on right now with verbiage first. Then I start bringing you into charts. And we're going to cover in detail weekly, daily charts, SPY, S&P. We're going to look at seasonals. We're going to look at price count studies, where I think these markets might be headed and why. These reports are only up for 3 business days, so you want to take a look at it now. Okay? Now for the news for tomorrow, what we have right here is the March trade balance data. That's going to come out, and they're expecting it another 10 billion higher, actually 14 billion if you take a look at that, 136 versus 122.6. Redbook Group, are we going to still see the stellar performer where the consumers out there buying up everything? I think last week's numbers were 6.5% gain, both ways that it's measured. Unreal. We'll see what it does. API numbers are coming out at 3:30. It's the first day of the FOMC meeting, so you want to pay very, very close attention starting Tuesday. What's this going to do and where are we? I am in the camp solidly that the Fed is going to just sit absolutely still at this meeting, do nothing. They had a strong jobs report Friday. Did you look at today's ISM service data? The headline number was still, the market is in a growth pattern there. why should they be cutting rates in that? You know, I think they need to either get labor weak, something, because tariffs, as the Fed said, we want to see the pressure when the tariffs come. They're inflationary at first. Are you going to feed into that with tax cuts? I don't think so. I'm with interest rate cuts. That's what I wanted to say, and the answer is no. All right. So as we come here, and by the way, while you're here, you'll see at the very top up there an icon with a zero, a zero with an I in it. If you click it, that will take you at the end of this so that you can get to that report without having to go to iraepstein.com. It'll just take you all the way through. A lot of red behind me, as you can see. So let's go to the first chart. AI, we covered it over the weekend, but let's cover it now. Here's what I see, a flat market. The market down, up, came back, and had a rally right through here. The pattern has been higher lows and a higher high. Now, if you take out 2148, you get this market in trouble. Then you start breaking through that sideways action, and it would call possibly to get back to 2101. The market had hit a week, not this past week, the week before it, the upper Bollinger Bands. What's so important about that? When you go to Bollinger Bands, upside or downside, you normally run into a brick wall. It depends where you're coming from. If you're coming from overall sideways action, which this was not in my opinion, you could run the band with what we call a gorilla run trade. This was more sideways action, had the length I like, and eventually it's going to push out of the band after sideways action one way or the other. I cannot call this sideways action. It just seems to be doing this, wave upon wave, up and down at this point. When I look at the momentum, we have an embedded reading. Both numbers are over 80 today. They were over 80 on Friday, and they were over 80 the day before on Thursday and the day before. So is the market tiring? Well, if you close under 79, the odds are very strong that the market is going to make a run for the 21 level, and that would, in terms of momentum, I teach that's where the professional trader under that number on a close bails. Now you'll say, well, how do I do that? Well, there is an aftermarket. I mean, for my own account, I use it all the time. Sprouts Farmers Market. If you live in Arizona, which I don't, this is extremely popular. It's out in the Southwest. They have over 420 grocery stores. They're adding about 25 to 30 a year. It's a big growth. It's one of the smaller ones of that category. But I don't like what I saw today. You're down to 79.92 after having an embedded reading that has carried the market to new highs. And now the question is, do you lose that reading? If you lose the reading, especially by the close, I look for price and the 18-day average to come together. The market has to rescue itself tomorrow. A good thing for the market was that it closed at the day's highs for all purposes, not at the lows. Had it closed by the lows, I'd have said you're going to lose that reading tomorrow. I'm not prepared to say that. It's still bullish till it isn't, but I would go off momentum more than I would price. AVGO, Broadcom, another person wrote me. Remember I asked you to write me and I'll start using the different things you asked me about? I'm doing it. Nah. Time to take something off the table. It's still a bullish embedded reading. It's not the whole position that I'd say, but the way I teach trading, first challenge of a Bollinger Band and a 100-day average, I think that the ka-ching, away you go, ring the bell here. This market's just come from 140 to 200. What are you looking for? Okay. In Google, again, you caught up to the Bollinger Band, broke back, challenging it, but very overbought. I love Google long term. I think their business model is great. I don't care if different divisions and different things in there have to be broken up eventually. I think they're in good shape. Netflix, I'm a bit worried about what this movie thing is all about. To me, they're the ones that have the most foreign exposure. Because if you go on, how many of the movies do you watch with them that they're either captioned or they're dubbed over. So it'll be interesting to see what happens. Now, the good news is they don't produce a lot of their movies. They buy them. So you got to understand how that goes. However, Disney makes movies. I've seen Amazon Prime recently making movies because they don't have the buying power of Netflix, but I haven't seen Netflix make many movies. So it'll be interesting to see. I can tell you the first thing, I certainly wouldn't go abroad if that tax comes in the way the president would like it. I think the president didn't talk to the industry, as he so often does. He shoots from the hip, wants to help Hollywood. Maybe the wrong way to do it. Maybe a tax credit was the right way. And that's what I'm reading. I certainly am not a movie producer. Lower highs. You can see what the market is doing. Okay. You broke back on it. Look for support at the 18-day average. Fascinating thing. If you look at Charles Schwab, they have an index called STAX, which is a volume, a trading activity index, the Schwab Trading Activity Index, STAX. Clever and good. It dropped in April a lot. I'll bet if you had it for Robinhood, it went up. I think it's the different type of client. I think the more conservative client is with Schwab, and they pulled back on trading. And I think the young kids, what they are preaching to, they love the volatility, and I think they were all over the market. Do I know it? I don't, but that would be my guess. In XOM, I'm bearish. I mean, I want to go with OPEC. I don't want to fight them. When they say, hold on, everybody's now complying, I don't want to be short anymore at that point. But until that happens, they have the stick. I want to be with the stick. Lower highs, lower lows. You've opened the door down to the 101 level, 189. In stocks, I'd be cautious. I know you're trying to embed and doing it. Day one of embedding today. Day two, yesterday. Day three, the day before, and day four was there. So you're embedded. Could you get up to the upper band here? Absolutely. Just be careful here, because as you approach it, I would say I would expect pros to take money off the table. It's been a beautiful run. It's embedded. Until the red line closes under 79, I am in the bull camp in that market. In XLF, it's the same. But I do think, just like I mentioned on one of the other charts, first time you get up to a 100-day average, upper Bollinger Band, even if you're embedded. I teach in my enhanced Bollinger Band course how you take something off and where you put orders in if you want to come back in. That's all part of what we do. The industrial sector. I went through this over the weekend. I looked at all the companies that make up the XLI, and that's what it is. It's a conglomeration of all the industrial companies. It's not an index of activity. It is in its own way, since these companies all participate in that activity. This thing's on a tear. It's embedded. Again, I would be telling you just what I've said on the others. First challenge of key moving averages and that. Let the market take you out, but you're peeling off positions. That's what I would teach. Doesn't mean you have to listen to me. XLE, I've taken a bearish stance on this. You'd have to take this market and get over the highs of Friday. If you can't do that, you've opened the door up for the lower Bollinger Band. We'll see if the market can do anything with that. In gold, big rally day today, as I said. You're up nearly 3%, so the market really came back in a nice way. Is it anything more than a bounce? That's what we don't know. It's certainly not trending per se. Doesn't have higher lows, higher highs. Silver X, not so good. Lower highs, lower lows. Fighting a big battle now. At the 18-day average, will be enough slippage to get to the 100 is the question that I'm asking. In the copper market, you've run into a buzzsaw against the 100-day average in green. Be careful there. The market has lost its upside momentum. I can make an easier argument for 37.27 than getting up to the upper Bollinger Band, unless a piece of news comes out that I know nothing about. In BND, you've stepped out of the uptrend. So that whole rally, kaput, done, finito. Market took out that low. It's underneath two key moving averages. You could catch some people here, but do not expect it in front of the FOMC meeting, if you were long, you're stepping out of the market. In addition, you got up and you heard me say, first time you get to a 200-day average and you haven't been there in a while, it's numbers that I think professional traders back away from. Admittedly, you were up over it 3 days and then you pulled the plug. You know, I wish I could give you the day that it hits it and the timing, but I can give you the zones. Hope that I'm right with them. Not always. As you can see in the dollar, you've rallied right into the buzzsaw. The 18-day average of closes, you're overbought. I don't know which way it wants to go from here. Can't get an idea. And the same thing in FXE. It's fallen down to its key support. I guess if it gets under 103.94, you open the door for 102.46. But why should the dollar rally in all this? Maybe because the Fed isn't going to do anything? I don't know. That could be something. So you put it together, you try to come up with an idea. Remember, you're going to see up there a dot. Go to iraepstein.com. You can click that or just go there and take a look at the SPY S&P Stock Index report. You got one more day to do it that I'm aware of. We may extend it a day. They're telling me that they're getting pretty good looking. A lot of people coming to it. In any case, I'm Ira. You have yourself a great day.